Spring-loaded for bad news. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of July 16, 2018. And I say the market is spring-loaded for bad news. Here's a drop that we had Friday. It was about 7 o'clock Pacific time, and the market dropped pretty sharply. About 8 points. Not a huge drop, but pretty sharp and quick drop. And this came out as news was breaking of indictments from the Mueller team. And it turned out, it was only a bunch of Russians. And so the market resumed and ended up closing roughly up for the day. But I think it shows how the market is poised for any bad news. And I think that's going to be a bigger reaction than any potential good news. Another good example of this is JP Morgan earnings. Let me pull that chart up here real quick. So JP Morgan and Chase announced their earnings on Friday, and you can see the price was down just a little bit, 0.33. But what was the news on JP Morgan? They posted record second quarter profits, and it just wasn't good enough. So the market, even though they posted really good earnings, the market, we're more interested in bad news, and I think that's permeating the market right now. It is, if we go back to the S&P 500, do a quick analysis on this. The S&P 500 did eke out some gains. It took out the highs from June, so this pattern that I've been talking about for several weeks of a higher high, higher low, higher high, higher low, higher high, higher low. This pattern continues, but I think there's skepticism. That would be the right word. Now we're right up against the highs from March, and let's see if we can break through those. If we do break through those and there's no bad news, then we're probably going to go on and take out the highs from January on the S&P 500. But I think there will be an oversized reaction if there is any bad news coming out. So again, JP Morgan had good news on their earnings. We got several banks coming up this week. We're kicking into earnings season, and there's quite a handful coming up. Let's take a look at those. On Monday, we've got Bank of America reporting pre-market. On Monday, by the way, Netflix is reporting as well after the close. On Tuesday, Goldman Sachs is up pre-market, and some other big companies, United Health, Johnson & Johnson. And then on Wednesday, Morgan Stanley pre-market, and another big company, Abbott Labs, pre-market. So a pretty busy week for earnings announcements. No real big economic reports coming out this week. We do have Jeremy Powell scheduled to begin speaking. You can see here on the Econoday calendar, Jeremy Powell begins speaking 10 a.m. Eastern Time on Tuesday, and he's going to be giving his semi-annual update, monetary policy on testimony before the Senate Banking Committee. So earnings on the banks and big companies, Jeremy Powell's comments could all provide the vehicle for some surprises, and it appears the market is spring-loaded for bad news. The good news, we're going to keep drifting up, and I've discussed the pattern here. If there's any bad news, we could have a pretty dramatic reaction to that here at these very high levels of the market. The air is pretty thin up here. And so we'll have to watch and be nimble and be ready as information comes out. Of course, we got President Trump meeting with Boris Yeltsin, and we'll see if there's any breaking news that comes out of that. So the market is more so than normal tuned into news and events, and again, I think biased to bad news. If there isn't any, and overall the economy's great, probably continue to drift up. Any bad news could cause a pretty dramatic reaction, and we'll just try to be ready for that. The key in trading is always managing risk very, very closely, so that if things do go against us, we can control the losses, get out quickly, and then have our winners be much bigger than our losers, and overall be profitable. one quick story I'll share with you, a news article here. Here's Ron Paul, former congressman, libertarian, saying, hey, this is the biggest bubble in the history of mankind, and it's going to burst, according to Ron Paul. And he's saying about a 50% decline. Now, he's been a bear for a long time. I've been saying this for over a year, but is 50% possible? Let's take a look real quick. I've got the S&P 500 chart up here on a weekly basis with Fibonacci retracement levels drawn. So these two blue lines are the predicted retracement zone if the S&P 500 begins a correction. So that would be, current levels 2801 to 2114 down to 1638 when the correction begins, and it will someday. It may go on to new highs first. We'll reset these, but if it were to start correcting from here, midpoint of this would be about 1878. So that's not a 50% correction, but it's a pretty good move down. So when that begins, and there's no evidence of it yet, but when it does begin, and history tells us it will, we'll be ready, and that will be an opportunity to make a tremendous amount of profit to the downside. Meanwhile, let's go ahead and take a look at gold and oil as we do each week. Here's the daily chart on gold futures, and I got to be honest, I've continued to expect gold to go up, and it continues to go down. It just put in new lows last week, so in a downtrend, took out previous lows, got another previous low to watch here. But typically in times of uncertainty, there's this flight to quality, people moving to things like gold. It's not happening right yet, and that's okay because I didn't have evidence of gold moving up, so I certainly wasn't taking any trades. But if we get that evidence in the future, then we'll take it. But for now, it's in a very clear downtrend. I would not try to short this at this level. And oil. Oil has been volatile, no surprise, it usually is. In June, we had a really strong run up in oil. Early July, a really sharp pullback. Now we're above support levels, and with this overall move, the prediction is for more highs in oils once we get through this volatility. So after this pullback, looks like we found some support, and it looks like we should expect oil to continue up above 80. Maybe hard to believe, but that's what the analysis shows. On the way, there will be, of course, volatility. Oil is difficult to trade, but we're clearly in an uptrend. Well, that's it for the update this week. And again, I think the market's spring-loaded for bad news. And, if there isn't any and the overall economy is still strong, we'll continue to drift up, maybe to new highs. If news that the market perceives to be bad comes out, we could see a pretty dramatic reaction to it. And for those who are ready, that'll be a great profit opportunity. And hopefully you are ready. You got a trading plan. If not, Follow Me Trades we have a trading plan, and we're trading according to the realities of the market and have a stock and option pick service. And if you're interested in that, there's a link available to take a trial and trade along with us. We are continuing to make profit even through a pretty challenging year. All right, take care. Keep your winners big, your losers small, and we'll catch you on the next update. Thanks.